Did the recent tame inflation data out of Canada suggest that the Bank of Canada is getting close to ending its current hiking cycle? On June 27th, Canadian CPI came in at 3.4% year-over-year rate. Although the number was as expected, it confirms a dramatic decline in inflation from the CPI highs of over 8% back in June of 2022. This number was particularly comforting to markets when compared to Canada's last reading of inflation, which came in at a higher than expected 4.4% back on May 16th. In the days after the latest reading, the loonie lost 1% of its value against the dollar, partly reversing the almost 4% up move since June 1st. Something slightly unusual about the recent up move is that it happened despite crude oil's weakness, which has headed down 12% since the beginning of the year. Now, crude oil and the Canadian dollar versus the US dollar usually trade at a high correlation based on the export-import relationship between the two countries. Lower crude prices also appear to be acting against inflation in both countries. Prior to the CPI number, futures markets were pricing in a 70% chance of another rate hike at the Bank of Canada's July meeting. Post-announcement, that probability had dropped to 60%. Now, the CME Group offers three different size currency contracts, the Standard, the Mini, and the Micro, in order to match a trader up with their preferred risk tolerance. We're going to be using the Micro in these examples. If a trader believes the Canadian dollar could continue lower from here, they could express that by selling the September Micro Canadian dollar futures contract at 0.7560 and target a move back to the May lows of 0.7350. A stop for this trade could be placed above at 0.7700. This trade can make $210 if the target is reached and risks $140 if you're stopped out of your level. Now, if a trader believes that the Canadian dollar could resume its rally from here, they could express that by buying the September Micro Canadian dollar futures contract at 0.7560 and target a move to the August of 2022 highs of 0.7850. A stop for this trade could be placed below at 0.7400. Now, this trade can make $290 if the target is reached and risks $160 if you're stopped out of your level.